The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 17th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, TV Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, of course, inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 220 points. 24,791 is what she's printing. S&P's up about 29, 2706. NASDAQ 100 up 2% at 6812. That's 137 points to the upside. Russell's up 1% or 15 points. Semis are up 22 bucks, 1 7/10%. Trannies are back 31 bucks. She's trading out at 10,578. Otherwise, it is mean and green across the board. You've got the spot volatility index, interestingly, down nearly minus 10%. It's actually down minus 9.48%. Trade out at 14.99. You want to watch that end of day figure. If it is a closing below minus 10%, I always have to think about that, how to properly state that. That oftentimes marks an initiation move inside of the market for the S&P 500 out there. Something to think about. The gold is off a buck, trading at 13.49. Silver up 9 pennies, 16.77. Lead the charge the upside. Amazon 53 buckaroonies. Booking Holdings up 53. Google's up 37. Netflix up 30. To the downside, Ryanair down 5 bucks. That's 4%. Apellis Pharmaceuticals, APLS, down nearly 14% or 4 bucks. Goldman Sachs off 4. Everest Group down 4. So let's begin the day. Go to our first question. We've got a couple that have come in by email. And the first one is from Tim. And Tim is a subscriber. And so he's labeled this market update. And Tim, I hope you're listening. Maybe you'll just send me an email and confirm that. But he said, hi, Steve. I'll say hi, Tim. Wondering what your midday thoughts are on whether we are hitting resistance or not. I'm thinking about taking some profits in my IRA accounts. Now, what I don't know, Tim, is if you're specifically referring to the two trades that we are in, that we are long, which is the NASDAQ 100 or are the NASDAQ 100 and the Dow. So I'll cover those two areas specifically. And then I'll share my midday thoughts. So the first things first. One of the things that we were looking at, I think we have a caller. Do we have a caller? Is that what you're telling me? If we have a caller, callers at priority seating. That's the way that it works. Wouldn't you like to be able to go to a restaurant? As soon as you call, you get right in. Well, you're at that restaurant. It's called Tiger Financial News Network. So let's go to Kem in Altamont Springs. Kem, thanks. Is it Kem or Ken?
It's Kem, K-E-M.
Perfect, Kem. Well, thanks for calling. Altamont Springs, that's where you're at?
Yes, I am.
Perfect. And tell me how I can help you.
Oh, yeah. There's a stock called Novanta. The stock symbol is NOVT.
All right.
The stock broke out of a 52-week range. The stock has only been around since 2016. And when a stock breaks out of a trading range to a new 52-week high, how do you measure the extension in terms of the price extension above the 52-week high?
So it would be, I would measure it the same way whether it was a 52-week high or it wasn't. And what I would be looking at, we would use our lightning bolt tool, our A to B equals CD tool. And Ken, what I would be looking at is the prior swing point. In this case here, it looks like that high is January 23rd, 60.30. Or January 29th, 60.30. There was 311,000 shares on the 29th. There was 325,000 shares on the 23rd. What you would like to see come day's end is more than 325,000 shares as it passes, as it closes above that level of 60.30. You're at 60.90. There's no guarantee that you're going to close above that level just yet. If you don't and you do it on light volume, this says, well, it may not be ready to break out. If you do close above that level, then what I would do is I would take the low from the trading day of December 5th. That's what I like to refer to as the A point. For our purposes, I'll use the January 29th high. That's that 60.30 level. And then the retracement that I'll use for my C point of the A to B equals CD pattern is going to be the low from February 9th. That is at 48.40. That's going to give us a price projection of 65.05. That would be your one-to-one price projection with regard to Novanta. It could go beyond the one-to-one price projection. 69.58 would be the level. Now, it's only Tuesday, so we're too early in the week. You'd like to see if this is going to go ahead and take out those previous highs at 60.30. You'd like to see volume in excess of 1.2 million shares. Now, it's only Tuesday and you're at 600,000 shares, so that's a pretty nice thing. If I take a look at another way to do this for you, so now I'm on the weekly chart. By chance, Kim, are you watching us on Tiger TV?
Yes, I am.
Perfect. So the other way to take a look at this is you could say, okay, this equity here has been consolidating, and this will give us, in essence, a measured move. And when price breaks through a consolidation out here, the price break is typically equal to or greater than the consolidation. So we'll go ahead and draw in the equal to, and I'll just simply move that little rectangular box, so to speak, and this would give us a price projection of 72.86. So that would be your price range. But tell me, what are you doing inside this equity? How long have you had it, if you have had it? And, you know, give me what your trading or investing plan is on this.
I just spotted it yesterday because it came up in my filters list when I was looking at stocks with a bullish parabolic crossover. And what I did is I picked up just a few call options that's going to expire on Friday. These were 60 calls. I picked them up for 25 cents. And right now the bid is $1 to $1.45. But what I want to, the reason why I'm asking the question is because if it's going to hold that that break.
Hey, we've got to go to a break. Kim, I wasn't watching the clock here. So stay on through this break and come back and finish your thought for me, if you would.
Okay, we'll do.
We'll be right back. Steve Rhodes with TFNN. We're going back to Altamont Springs, and we're taking a look at Novanta with Kim. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're on the line with Kem in Altamont Springs, Florida. We're taking a look at ticker symbol NOVT. Kem's got a couple of call options that expire on Friday. Novanta Inc. is the name of the company. So I apologize, but the clock was cutting us off. So you've got a couple of call options, and your thoughts when you entered this trade a couple of days ago or yesterday was to hold it till when, or what's your – tell me again. So give me a little bit more info.
Yes, now that the stock is broken past this 52-week high, I wanted to actually start accumulating it because this is a tech stock that developed components for laser technology. So basically, this is something I wanted to buy and hold.
Okay, so you're in on this thing at a very at a late stage is what I would call this. You're definitely trying to play the momentum move out here, and I would have felt better on your call if today we would have seen this had volume as it was passing above the 60-30 level, and we don't know that it's actually going to close above 60-30. If it closes below 60-30 and does it with less than 311,000 shares out here, this would say, okay, can't bust it to the upside. And that means that you could experience a retracement. Nothing wrong with the equity, just it doesn't have the buyers in the store that you'd like to see to express that this thing has got demand that's going to take this up to the next level out there. The weekly chart looks pretty good, but the weekly chart also needs to close above that 60-30 level out here. And there's just not enough information as we speak at 1:20 in the afternoon on Tuesday to let you and I know whether or not it's going to do that. So that being said, then what's your next move?
Next move is to just wait and see if it holds the breakout, and again, see if volume picks up on the stock.
And I can't convince you to take your profits on this trade?
I'll take the profits in the options, and I guess I could take the profit in the stock too. I don't have that many shares that I bought. I only bought 1,500 shares of the stock.
Okay, so I was referring to the option trade. Okay,
and the option trade, I have I just a small position, just 25 contracts on the 60 calls I picked up for 25 cents.
Yeah, and I'd be taking those right now as we speak.
Okay.
Okay, and now the only reason I say that, now this is short term. Here's what you and I know. At 1:21 in the afternoon, it doesn't appear to have the volume as it's trying to get above a prior swing point out there. If I just switch this down to a 30-minute time frame, I can see that at 61.15, this is a fairly significant resistance level, because we're going to go ahead and take a look at a 30-minute TAS market profile. And that center of the box is at 60.50, which is much closer to the top of the box. So this very easily, and nothing is wrong with the stock, is just simply go ahead and pull back to 58.88. That's the bottom of that 30-minute profile out there. So I think you've got a nice trade with some nice profits. Doesn't mean it can't take out resistance out here at 61.15, but just considering, take that bread off of the table. With regard to your longer term position trade, then go ahead and sit on that. You've got these profits here to just simply weather out any kind of short-term retracement that you might see in the equity.
Okay, will do. Thank you very much.
You bet. That was Kim in Altamont Springs. And again, we were just taking a look at two different pieces of the trade. What we'd love to see, what he'd love to see, is simply this equity close above 60.30 and do it with conviction. You've got the wide price spread today, but I don't know what 179,000 shares equates to by 4 o'clock today. You'd have to divide it by, what, 9:30, 10:30, 11:30, 12:30, 1 by 4. So you divide 179,000 by 4 and multiply times 6.5, and then you'd have the number out there. So I want to go back to, so thanks for calling. Appreciate it. I think, Kim, that was a first-time caller out here. And I want to go back to, and I lost the question, but Tim was asking about, is the market up towards resistance? And actually, this is pertinent to Kim's question, because if we take a look at this equity here, Novanta, and all I have up, I've got the S&P 500 at the top. I've got the equity in the center level, and the very bottom panel, those bars are our correlation. This happens to be a 20-day correlation, and when the bars are above zero, and each of these bars are above zero, then this is very well correlated to the S&P 500, directionally speaking. And we can see as we take a look at the equity, it almost looks like we're looking at the same instrument out here. Well, we're not. The top is the S&P. The bottom happens to be Novanta. So very well correlated. And then that fits right into Tim's question, which is, are we at resistance inside the S&P 500? Well, the way that we can answer that, there's a couple of different ways. Specifically with regard to the S&P or the ES Mini is what I'm going to go take a look at right now, is the ES Mini, I think you and I covered this yesterday, formed a brand new TAS market profile. That's on a weekly time frame. And that weekly time frame, top of the box, is 27.05. We're trading right now at 27.04. It's been up as high as 27.08. So at this stage here, rejection has held. So, Tim, are we at a resistance level? Absolutely, at least with regard to the ES Mini. You may want to sit on this towards the end of the day to see what type of close that we have, because what price has also done is it has been able to get inside its daily profile, a profile that had formed a couple of weeks ago when price was below, which is very bearish. Now you're inside the range, so to speak. And if, in fact, you were to see the ES Mini close above 27.05, what you should see is a move to 27.12, and if it can take out that level, a move all the way up to 27.66, basically getting back towards those highs out here. So you're talking about an IRA account. And I don't know what your thoughts were when you were, I don't know how you're trading that with regard to the trade signals inside of the newsletter. But to answer your question, are we up against resistance? Yes, when we take a look at profiles. Yes, when we take a look at these descending price channel line that began at the all-time highs out here. So price is up towards that level. Doesn't mean that it won't break it, because we can see that these levels are likely to be broken based upon what we're looking at right now inside of the Dow equity futures contract, which broke through its descending price channel several days ago. So I still anticipate that this market is going to move higher. That's slightly different from really the decision that Kim and I needed to make with regard to his position out there. Now, what I'd love to be able to see for both of you guys and all of us in essence that are trade out here, that are in a long trade for the S&P 500, is what does this end of day, which is really the end of week indicator because it's a weekly chart for the S&P 500, going to look like? We are so very close to a bullish crossover. There are 119 stocks where prices are trading above the top of the box, 124 below. If we get a bullish crossover by the end of this week, we're likely headed back towards its highs. The S&P 500 is in a big consolidation. That doesn't take us up to the top of the box, but where it does take us to is probably the 2,800 area for the S&P. So when we come back, I see we've got another call on our line. One of our favorite guys, Ron in Denver. He wants to hear my thoughts about the SPY. And since we have just kind of been covering it, we'll be able to cover it a little bit further for Ron in Denver. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go out to Denver and speak with Ron. Ron, thanks for calling. Thanks for holding. How are you today?
Great, Steve. First of all, I'm mad at myself because you mentioned that Allegiant Airlines was going down, and I didn't buy puts this morning. It's down $3.70. So you called that and said it was going lower.
Well, that's what the horizontal trading ranges were suggesting to both you and I. But you can be mad at me too, because you might have exited the XLK trade and that thing gapped up this morning. So, and it's above resistance.
I got out today.
You did?
XLK today, and also my QQQs today.
Okay.
And, so I did make some good money on the XLK. I waited for that.
Perfect. Okay.
And I appreciate that.
Excellent.
In fact, I scaled out. I got out some yesterday and the rest today.
Okay.
On the XLK.
All right.
But I'm still long the SPY and the IWMs, and I just was, and again, I'm just doing it till the end of the week, and I just wondered, does the market? I know it. You just covered it pretty well on the SPY about the SP, hitting resistance, but
it doesn't mean that it can't take. It doesn't mean that it can't take that resistance out. So I guess that. So part of the issue is that you're dealing with more of a timing element than anything else, because in answering Tim's question, are we at resistance where we should sell our positions? My answer is no. I don't have anything to suggest that we should take that action. But that's a little bit different than what should you do between now and Friday out here. A much different decision. If I take a look at the S&P 500, as I say, it's possible that that with the next couple hours, we'll see a positive or bullish crossover on the weekly market breadth. And therefore, if we were to see that, there's no reason to sell. The daily chart, the market breadth for our TAS market breadth is very bullish. It's now nearly 3-to-1 bullish, 200 or 197 above the top of the box, 73 below. So that looks pretty good. If I go take a look at the Qs, now this is not going to tell you anything about the IWM, but it is giving you a fairly good view, especially the S&P 500, about overall market breadth out here. On the daily basis inside the NASDAQ 100 looks very good, 48 issues above the top and 15 below. And what that means is that if we just have some type of retracement, it's no big deal. But it just doesn't help you necessarily on that timing factor out here. The other piece of the timing factor is that so here's what I would do if I were you. I would take a look at the high. This is at about 12 noon inside the ES Mini. And that high was 2708.50. If by the end of the day you see that high get taken out, then I would stay with the trade at least for another day. The reason why I say that is because that would be that level that I gave you at 12 noon was a seventh wave move. Sometimes that can be a intermediate term top or bottom. In this case here it would be a top. But if price breaks above that level, then this thing has recycled to the upside, which it looks like to me it's going to do, at least as a 134. Price is just coming down, testing my red line. This is a 60-minute chart that we're looking at out here. But if it were me, that would be enough information for me to say go ahead and stick with the trade. If it doesn't close above that by the end of the day, then maybe you just simply start taking some of your profit off of the table for at least the SPY calls that you have. The Russell 2000, the Russell 2000. Let me see its chart out here. Now I have a delayed chart on a 30-minute basis, but I'm just curious what this thing is showing. I'll do, in essence, the same thing with regard to looking for wave counts. Give me a moment here to try to figure out where we are at this stage of the game. And this has not made it to wave number 7. I would go ahead and gauge everything off of the ES Mini chart and that level. And so if the ES Mini is able to take that out, the Russell 2000 is really stronger than the S&P right now. And so that's how I would trade it. The New York Stock Exchange is looking mighty nice as we speak right now. And the thing that I'm watching here, Ron, is, now go ahead and I'll expand this screen on our out here, is that as we speak right now, what we know is that the New York Stock Exchange was able to gap up above the gap to the downside. Well, it wasn't even a gap today, but it was able to move above the gap to the downside from the trading day, the low of March 21st out here. That's at 12,654. And getting above that is a bullish element. The other thing is the market breadth is so strong right now inside the New York Stock Exchange that its advanced decline oscillator is at plus 143.50. If this can get above plus 150, what it does is it tells us there is higher prices coming at us. Doesn't have to mean tomorrow, doesn't have to mean the next day, but it tells us that there are higher prices coming at us. And I would go ahead and continue to hold on to those positions for another day or so out here. But you know, you're
okay. One quick question, if you would. What ETF symbol goes with the New York Stock Exchange?
None. That's the bummer. There's none. All that you and I can do is use the New York Stock Exchange and try to glean information out of it. For example, that advanced decline oscillator reading, we know a couple of different things about it. One, when you get down to the minus 150 level, that's telling us that the New York Stock Exchange is oversold. Doesn't mean that it's going to bottom, but you start looking for bottoming patterns. When we start to see price move to lower lows inside the New York Stock Exchange, as it did between the time period of February 5th and February 9th out there, we saw price make lower lows, but we saw the advanced decline data make a higher low. That's a positive. That's a bullish divergence out here. And, in fact, that went ahead and that set the bottom or a short-term bottom from February 9th. You may remember, because you're a newsletter subscriber, we took a long position back then in February, partly because of this and some other things that you and I were looking at the time. We saw that there was this other bullish divergent pattern between the time period of March 23rd and the lower low that was made on April 2nd. We had that same thing where we saw a higher low in the New York Stock Exchange and its advanced decline oscillator reading. So even though you and I can't trade this per se, what we can do is glean tremendous great. That's just kick me out of school right now. But we can we can gather great
on the wrong syllable.
Exactly. But there's so much great information that you and I can glean from it that we don't want to ignore it. And that's why you and I take a look at the New York Stock Exchange. So
thank you, sir. Appreciate your time.
Hey, you bet. Thanks so much for calling. I appreciate it. That was Ron in Denver. So, Tim, I all that I can do right now is present the information to you. If I thought that subscribers should close out their position, you would go ahead and get an update today. I have no intention of sending that update out. But if things change in an hour or hour and a half, I'll send it out. But otherwise, I would sit on it. Because you say IRA account, I would sit on it for the longer term as we speak right now. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So a couple questions that have come in. This one came in earlier from Larry, and I've lost the question, but I can paraphrase pretty easily. And Larry, my recollection, Larry, you are in the dust trade out here, and what you had asked about whether I had done any type of studies in comparing the GDX to the HUI as an example, looking for divergences, because what you had noticed was that the GDX was stronger than the HUI. So the answer to your question is no, I have not, other than what I just have thrown up on my screen here as we speak right now. The top panel of the screen is the GDX, the center panel is the HUI, and the bottom panel is the GDX divided by the HUI, just to be able to take a look at relative performance. First of all, I will say or suggest to you, don't read anything into it. You're looking at two totally different sets of holdings. Inside the HUI, don't quote me, but there's like 15 or 16 equities, which are not the same as the 50 equity holdings inside of the GDX. So you're not looking at the exact same basket. You're not looking at the weighting, and you just simply look at each one separately. Is there anything here when we take a look at performance of the GDX to the HUI that gives us any kind of signals out here? And I don't know. I mean, I see something. I'd want to investigate it further, and that's with regard to when bottoms are formed out here. But you are inside of dust, and so I would prefer just simply to take a look at dust itself and give you my take on that, because I think you are on the wrong side of that trade. Not that you couldn't get a bounce here, but this is not this. If we just took a look at dust and we were evaluating dust, when we have this chart up on our screen, we would say, Larry, dust has a falling price oscillator below zero, and that's about as bearish as you can get. What does that mean? Well, that means that you should anticipate that prices are going to continue lower inside of dust for at least a couple of more days, maybe come back down here and test the bullish engulfing candle that is out here from January 26. But I don't see any reason when I take a look at the dust trade to be long dust. Now, that does not mean that you won't see some type of bounce up to Stevie's red line at 24.17. I don't know where you're at profit-wise, loss-wise, inside the dust. I don't see this as a great trade as we speak right now. So so that's my take. One, don't pay attention to comparing the HUI to the GDX. Whatsoever. You got totally two different components in there. And with regard to dust, I can't give you my seal of approval. Not that that's worth anything, but I cannot give that seal of approval that this is the right side of the trade to be in inside of the mining equities. You're in a market with regard to gold and silver that just simply continues to move sideways out here. And if we take a look at gold price in both euros and dollars, and we just simply come back to where this potential bottom of this consolidation is in both of them, what you're going to see in both metals priced in those currencies is you're going to see a series of higher lows out here. It just means that it's like, it seems like it's a cobra getting ready to just poke above and close above resistance, which is 1362.90 for gold in dollars and 1107.70 in euros. Are we there yet? No. Is this thing just moving sideways? It is. But if you go back even and take a look at the GDX just on its own out here, which I will do and I will put up, what you're going to see is you're going to see a series of higher lows out here. I would rather you be long the GDX than short via the GDX via dust out here. Has it broken out? No. But I can't see being short this specific trade. One of our dinners, Z inside the Tigers, I want to take a look at PAAS out here. And if we take a look at that with Stevie's Ninja Trader charts, this is probably going to go, there we go, so it's updated. Should be trading around 1683. Here, this has a rising price oscillator above zero. When the price oscillator, bottom panel of our screen, gets towards zero, as it did here on March the 29th and March the 30th, what you typically see is price and Stevie's red line catch up to each other. Doesn't tell us how it's going to get to that garden party. Just tells us that it's going to get there. And then you take a look at the trading days of April 4th, 5th, 6th, the 7th, the 10th out here, all were bullish tests of Stevie's red line. What's that mean? That means that PAAS, Pan American Silver, is going to go ahead and try to test the bearish area. We know where the snipers are. They're at the January 25th high and the January 26th sessions, a shooting star and a bearish engulfing candle. So they should head up into that area. You're already inside of the bearish engulfing from January 26th. So this thing looks to me, because of those bullish tests, that it wants to at least go test that area. Is it going to break it out? I don't know. We're not up there yet. We don't know what kind of volume we've got, so we can't do the same thing that Kem and I did in taking a look at his specific trade. But here's another example, I would say, Larry, that is saying, you know, if you start going ahead and taking a look at these miners individually out here, at least Pan American Silver, and at least the way that you're seeing the higher lows inside the GDX, it'd be a real struggle. Or you must know something different than what I can see out here. And I know there's a lot of people that are bearish gold. I know that. And I have to look through my lenses and say, what in the Sam heck are they looking at in order to be bearish gold? It's just consolidating sideways out there. So, Mr. Z, I hope that helps you out with regard to Pan American Silver and anybody else that's taken a look at the mining sector that we just took a look at. And I believe there are some other questions in here as well. When I say in here, I'm referring to Stevie's phone. And I don't know who that is calling, but we're not going to answer. So get me back to the email. So we've got Lee B. I won't use your last name, but Lee says radio show question, just the way you're supposed to do it. Thank you, Lee. It's just so much easier for my eyes to go right to it with regard to, I don't know how much crap you guys get inside your email, but mine is consistently full of it. Somebody's got to be able to create an app where the junk just gets filtered the heck out of there. In any event, and if you do that, you'll make zillions of dollars, gazillions of dollars. But in any event, Lee wants to take a look at. He says, "Hey Steve, hi Lee, great show, thank you very much. Can you tell me your latest thoughts on IWM?" Okay, looks like it wants to take out its all-time highs in the short term. Do you agree? Thanks. Have a great day. And Lee's in San Francisco, so thanks for calling from San Francisco. What a great town that is. So, to answer your question, Lee, the first thing I'm going to do is take a look at the Russell 2000 equity futures contract. And here's what you and I know. We know that yesterday marked a Tom DeMark setup 9 count, black number 9. We know that Session did not trade into bars 5 and 6. That's always a positive there, because this can be a time when you get to that 9 count where you want to see or wants to turn around. So it looks to me like it's headed back towards its all-time highs. Is it going to take it out? This I don't know. If it does take it out, well, that's a beauty, because that sets up really a huge A to B equals CD to the upside. If you're going to ask me where the Russell 2000 equity futures contract could head to, I'll give you a price point to the upside of about 1681. Yeah, 1681. That'd be new all-time highs out there. Right now, it's bullish. As long as the Russell 2000 equity futures contract stays about 1547.80, there is nothing wrong with it. Steve Rhodes with TFNN. We might have to take a look at one thing, though, when we get back from this break on the TF. We'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned, because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. And yeah, back on Pan American Silver out here, we can see that both on a daily, you didn't see it, but I was doing it during the break here. It's really moving higher with light volume into the swing area that is coming with. On the weekly chart, also very light volume. January 22nd was 7.2 million shares. So far, we're at 1.2 million shares with a day and a half worth of trading. So this says that the 1729 area is a resistance level. It's the top of its TAS weekly profile. Neither bullish nor bearishly structured out here, but it's moving into that swing point with some light volume out there. Now, with regard to the Russell 2000, what I did want to also say, as I noted as we were going into that breakout here, so I was looking at the price oscillator, and you can see how it's nearing the zero level. It's right now rating as minus 0.46, so very close to zero. So over the coming sessions, doesn't mean tomorrow, could mean Thursday, Friday, could mean Monday. What we should eventually see is Stevie's red line, currently 1547, and price catch up to each other out here. So that's the only drawback. But the question was, is this going to get to its all-time highs? Looks like it very well could be, even if there is some kind of pullback or retracement. So, Lee, I hope that helps you out with regard to taking a look at it, meaning the Russell 2000 IWM. I don't see anything else that I've got that's out here. We've got about 30 seconds. So what have I not covered that we need to pay attention to or take a look at? And that's a great question out here. Well, that's a great question. I'm looking. Let's take a look at divergent patterns out here. This with regard to the SPY and the equal-weighted version of the SPY, RSP. And that's the top left-hand panel, and you can see that descending price line, the descending line, we're looking at end-of-day prices out here, has broken out above that descending trend line inside the equal weight. The SPY has not. It is the equal weight that almost always, I can't say 100% of the time, I'll say 99% of the time, that leads the way with regard to where the weighted version, in this case here, SPYs want to head to. That says higher price. Folks, stay tuned. Your favorite polar bear, David White, he's up next. After David, because it's Terrific Tuesday, you got Tom O'Brien from 3 to 5, Andy Heck from 5 to 6. I'll be back with you on Wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.